You're not broke. You're trapped. And most people never figure out the difference. Broke is temporary. Trapped is a system. And right now, that system is running your life. The money comes in. The money disappears. You work, you pay, you survive, and somehow you end up in the exact same place every single month. Zero. Sometimes below zero. And the worst part? You've stopped being surprised by it. That's not a money problem. That's a design problem. And you are living inside someone else's design. There are levels to this. Where you are right now determines how you sleep, how you think, who you become. Most people stay at the bottom their whole lives. Some reach the middle and think they've escaped, until they realize the middle is just a quieter version of the same trap. And a very small number of people break through completely. Not always rich, but free. Actually, completely free. Let's start at the bottom. Because that's where most people begin. And that's where most people stay far longer than they should. You're 23. First real job. Customer service outside Houston. $32,000 a year. Sounds like a start. Then you do the math. After taxes, after health insurance, after the retirement contribution HR convinced you to set up, you're taking home $2,100 a month. That's it. That's everything. Rent is $900. Car payment is $342. Groceries, phone, utilities, another $450. By the 10th of the month, you have maybe $200 left. By the 25th, it's closer to $40. Then the paycheck hits. And the cycle restarts. 78% of Americans live this way. Not just people at 32,000. People at 60. At 90. The number changes. The feeling doesn't. But level 1 isn't just about money. It's about mental space. When you're this close to zero, your brain never fully powers down. There's a calculation always running. Can I afford this? What if something breaks? What if I lose this job? That background noise burns energy. It makes decisions harder. It makes you shorter with people you love. You work harder, not from ambition but from fear. Fear and motivation look the same from the outside. They feel completely different from the inside. And then it happens. It always happens. Car breaks down. Not an oil change. A real failure. $1,400. You have $47 in your account. 9 days until payday. So you do what everyone does. You put it on the card. This is how real debt begins. Not from recklessness. From one normal emergency hitting a person with no buffer. The card gets used. The balance sits. Minimum payment is $35, feels manageable. But the interest rate is 24%. Pay only the minimum and you'll still be paying for that transmission 6 years from now. Final cost, more than double. You didn't know that when you signed. You know it now. This is the first trap. Not the debt itself. The minimum payment illusion. The structure was built to keep you exactly here, paying just enough to feel in control, while the balance barely moves. The pain stays below panic level. Manageable enough to stay. Uncomfortable enough to keep you distracted. A year passes. Another emergency. A short trip because you were burning out and needed to breathe. Balance is now 4,000. And here's the part that stings. Your credit score has actually improved. Because you pay on time. That rising score isn't a reward. It's a signal. It means you've become a more attractive borrower. More offers are coming. They're already on the way. Pre-approved loan arrives. $12,000 at 18%. In your mailbox. In your email. Banner in your banking app. They want you to borrow more. Because you've proven you pay back. To them, you are the perfect customer. Some people take it. Consolidate everything into one payment, feels smart. But if the behavior doesn't change, the cards fill back up within 18 months. Now there's a loan and max cards. Debt higher than before. This is the consolidation trap. It works on people every single time. This is where everything either changes, or doesn't. You're 28. Small raise. 38,000 now. Card balance is 7,000. Student loan from that semester you tried, 4,000 in deferment. Car loan, 8,000 left. Total, $19,000. On a job that pays 38 before taxes. Welcome to Level 2. Level 2 is dangerous not because it's hopeless, but because it's comfortable enough to stay in forever. You're not drowning. You make all your minimums. You go out sometimes. Life doesn't feel like a crisis. It just feels tight. Always a little tight. And years pass like that. The damage at Level 2 is invisible. Dreams shrink quietly. Not in one moment, in small ones. Your coworker mentions she's buying a house. You stop thinking about houses. Your friend books a trip to Portugal. You smile and change the subject. You stop applying for better roles because rejection here feels like confirmation of something you don't want to say out loud. Debt doesn't cost money. It costs boldness. Every time you consider making a move, quitting the job that's draining you, taking a risk, building something, the balance whispers that you can't afford to fail right now. So you don't try. Nothing changes. Another year passes. And then one night, something breaks. Not gradually. Not slowly. A number on a screen. Negative. 5 years of work. 30 years old. And something shifts, not sadness, something harder. Something that looks like anger and feels like clarity. You go home. You sit down. You write every debt on paper, not as 3 separate payments, but as one total number. $19,000. You see it whole for the first time. Not manageable pieces. One real, heavy number. And that changes something permanently. You cannot fight what you refuse to see. This is where the climb begins. Not when the money improves. Right here, in this moment. You stop using the card. Cut the subscriptions. Bring lunch to work. Feels embarrassing at first, then it doesn't. You pick up extra work on the side. Every dollar above your minimums goes to the smallest debt first. And when that first balance hits zero, something happens in your brain that math alone can't explain. It's proof. Proof that this is not permanent. That you can move. The momentum builds. Student loan, gone. Credit card, gone. Car loan, months away. You are 32 years old, and for the first time since you started working, you are not behind. Let that land. Not rich. Not ahead. Just not behind. And from here, everything looks different. This is level 3. And this is where real education starts. You have margin now. The gap between what comes in and what goes out. Margin is not just money. Margin is options. Margin is the ability to say no to things that don't serve you. Margin is what freedom actually looks like before it has a name. Most people who reach level 3 immediately spend it. Bigger apartment. New car. The vacation they delayed for years. The gap closes. The machine resets. They return to level 2 with higher credit limits and nicer furniture. But if you protect the margin, if you treat it like something worth guarding, everything changes direction. You put $300 a month into an index fund. Simple. Unglamorous. At 10% average annual return in 10 years, that becomes $61,000. You didn't grind for that money. Time built it. This is the entire game, not working harder, but building things that work without you. It starts at $300 a month. That's it. Money used to feel like a threat. Then it felt like a math problem. Now it feels like a tool. That shift, that's not financial. That's psychological. And it changes how you see everything. You're 36. Car is paid off. You didn't replace it. People ask why. You don't explain anymore. The explanation takes longer than most people are willing to listen. Emergency fund is solid. Investment account is growing quietly in the background. You changed jobs, because margin made risk possible. 58,000 now. And because your expenses didn't grow with your income, the gap between what you earn and what you keep is the largest it has ever been. That gap. That's the only number that actually matters. This is level 4. And it doesn't look like what you imagined. No mansion. No announcement. It looks like a Tuesday afternoon where you realize you could stop working for 6 months and survive. It looks like turning down a project not because you're lazy but because you genuinely don't need it. It looks like a number generating returns that cover real expenses, not a dream amount, a real one. Quiet freedom. The kind that never posts about itself. You are not the same person. The 30-year-old staring at a negative balance would not recognize who you are now. Not because of the money. Because of what the journey rebuilt inside you. You see the structure now. You see the minimum payment for what it is. The consolidation offer. The pre-approval letter. The rising credit score that's actually a recruitment tool. You see the gravity, the invisible downward pull that keeps most people exactly where they started. And once you see it, you can never unsee it. The same rules that trapped you can be used in reverse. The credit system that buried you can get you a 3% mortgage instead of 7%. The tax code that punishes workers rewards owners. The same compounding that worked against you in debt works ferociously for you as an investor. The machine doesn't have loyalty. It just runs. The only question is which side of it you're standing on. Right now, someone is sitting in an apartment outside Houston. It's late. They're staring at their bank account. They work hard. They pay on time. And they cannot understand why nothing ever grows. They're at the beginning. They don't know it yet. The same car will break. The same card will get used. The same pre-approval will arrive. The same structure will pull them down. And no one will warn them. The machine never warns you. The only thing that changes any of it is what you know when the moment comes. Not income. Not luck. Not timing. Just what you know. The machine keeps running. The only question is whether you're fuel or the one running it.